Ladies and gentlemen, good day, and welcome to the DB Corp Limited Q4 and FY23 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touch-tone phone. Please note that this conference is being recorded. We have with us today the senior management team of DB Corp Limited, Mr. Pawan Agarwal, Deputy Managing Director, Mr. Girish Agarwal, Non-Executive Director, Mr. Lalit Jain, Chief Financial Officer, Mr. Mustaq Ali, Vice President, Finance and Account, and Mr. Prasun Kumar Pandey, Head Investor and Media Relations, who will represent DB Corp Limited on the call. The management will be sharing the key operating and financial highlights for the quarter ended March 31st, 2023, followed by question and answer session. Please note that some of the statements made in today's discussion may be forward-looking in nature and may involve risk and uncertainties. Documents relating to the company's financial performance have already been emailed to you and are available on the website of the stock exchange and the company's investor section. Trust you have been able to go through the same. I now hand the conference over to Mr. Pawan Agarwal. Thank you, and over to you, sir. Mr. Pawan Agarwal, your line is unmuted. You could please go ahead.
Yes. Thank you very much, everyone, and a very good evening to everyone, and thank you for joining the Q4 FY 2023 DB Corp earnings conference call. We will begin the call by highlighting the key financial performance for the full year and quarter ended March 31st, 2022, followed by key operational updates. We concluded fiscal 2023 on an optimistic note with strong results on the back of growth in ad revenues across all major markets and circulation. Our print advertising for fiscal FY23 grew by a strong 27% YOY. Print advertising grew strong 16% YOY in quarter 4 FY23. Our Concall EBITDA grew by impressive 34% YOY, and in quarter 4 FY23 to rupees 889 million, with margin expanded by 250 basis points despite high newsprint prices. We've been highlighting over the past few quarters on the strong revival of traditional media, and this quarter once again demonstrated print media as the most credible source amongst advertisers, resulting in strong growth in advertising revenues across categories. Traditional advertisers such as real estate, education, white goods, and jewelry, etc., continue to use print as their preferred medium, and the auto segment has started to see some movement. The Audit Bureau of Circulation Survey for July 2022 to December 2022 continues to position Dainik Bhaskar Group as the largest circulated newspaper group in India, as well as placing Dainik Bhaskar in the top position as the largest circulated newspaper in India with a very wide gap with number 2 print player. Consolidated full-year advertising revenue grew by a strong 25.4% to rupees 14,827 million versus rupees 11,827 million of FY 2022. Circulation revenue recorded a growth of 1.5% to 4,627 against 4,558 million of previous year. Total revenue grew by 21.2% YOY to rupees 21,682 million as against rupees 17,885 million. EBITDA grew by 12% to rupees 3,611 million as against rupees 3,228 million after considering forex loss of rupees 52 million, aided by stringent cost control measures and despite high newsprint prices. Consolidated PAT for the full year grew by 19% to rupees 1,691 million versus rupees 1,426 million in FY 2022 after considering forex loss of rupees 60 million. In quarter 4 FY 2023, advertising revenues grew by 14.2% YOY to rupees 3,578 million versus rupees 3,134 million of Q4 FY 2022 on the back of increased ad spends by traditional sectors as well as new age sectors. Circulation revenue remained flat at rupees 1153 million as against rupees 1152 million of Q4 FY 2022. However, it may be noted that our circulation teams are making strong progress through several campaigns aimed at our trade partners as well as our readers. Total revenues grew by 13.5% YOY to rupees 5,446 million as against rupees 4,799 million in Q4 FY22. EBITDA grew by 34% YOY to rupees 889 million versus rupees 663 million, with EBITDA margin expanded by 250 basis points, despite, again, a very high newsprint prices, but on the back of other operating cost-cutting measures that we took. PAT for the quarter grew by 67.3% to rupees 410 million versus rupees 245 million in Q4 FY 2022. Moving on to our digital business, which has been a key focus area and an important vertical in terms of future growth for our business. The company has been steadily growing its loyal monthly active user base across its app, with an increase of over 7 times from 2 million users in January 2022 to more than 14 million in March 2023. Our teams continue to work on the digital apps to improve the engagement with users, and this is helping in overall retention of our readers across all formats. Coming to the radio division, in FY23, revenues grew by 20% to rupees 1,342 million versus rupees 1,122 million last year. EBITDA grew by 28% to rupees 402 million versus rupees 314 million, with EBITDA margin at 30% in FY 2023. Our teams at MyFM continue to work towards building strong brand visibility through key tie-ups, local and current affairs, and innovative content to increase audience engagement, which will help us increase our advertising rates as well as augment our revenues. With this, I would now request Mr. Girish Agarwal to update us on the operations.
Thank you, Pawan, and good evening, everybody, and thank you for joining us on this call. As Pawan stated earlier, we concluded this fiscal on a stronger note with strong YOY growth. Especially Indian print media industry is witnessing a strong growth in advertising across segments. And this is happening across languages, Hindi, Gujarati, Telugu, Tamil, Marathi, which is very heartening. Our key market seems to be doing very well, and as it is evident that in the GST collection, it's up by almost 15-25% from our market where Dainik Bhaskar operates. Dainik Bhaskar's editorial strategies and dominant position in these markets are resultant in a strong growth of advertising revenues across the board. In addition, the new age sectors, the digital players are also using print, for their hyper-local campaigns. And we are very optimistic that this trend of increasing revenues will continue forthcoming quarters. Our radio and digital presence are ever increasing, and we continue to innovate our content, improve our omni-channel platform for delivering truthful, crisp, and pertinent content to our loyal reader base. We have been implementing various cost optimization measures, as we have been highlighting over the past few years, to ensure that these measures keep our cost in control. And we're very happy that so far, whatever cost measures we have informed you, we have lived by that commitment. The newsprint prices have also started softening further, and as indicated in our press release, while newsprint prices were high on a YOY basis, it has started to taper off, and the true benefit of this tapering will be visible over the forthcoming quarters. This is all from our side, and my colleagues and I would now be very happy to respond to your queries. Thank you very much.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use only handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Our first question is from Rushabh Shah with O3 PMS. Please go ahead.
Hello.
Yes, Mr. Shah.
Am I audible, sir?
Very much.
I have a couple of questions.
Please go ahead.
We have seen the prices of paper fall, and which will lead to the cost savings. So will we invest the savings in increasing the circulation, or more investment in digital part of the business, and why so, sir?
So please understand, whatever savings are coming, that will be further adding on to our bottom line. But that is not stopping us from any expansion plan. As I mentioned to you in the last quarter also, that we are looking at circulation growth, expansion in most of our markets, MP, Bihar, Rajasthan, Gujarat. So we are anyway going ahead with that. We are doing it. And also in digital, we are not leaving anything, any stone unturned over there. And that is the reason why we have the huge number of app monthly users and daily users also. So please rest assured, your company has enough bandwidth, enough reserve with us to take care of any such requirement and expansion issues.
Okay. And then my second question is, how is the capacity utilization in terms of ads in radio business?
So in radio business, utilization is about 11 minutes, in an hour, if you look at the entire clock. So there's still headroom for growth in, we have 30 stations, a lot of headroom for growth in smaller stations. And bigger stations, we are trying to reduce this in peak hours also.
And then my third question is there a scope to improve advertisement rates in radio or newspaper?
So the advertising rate is not one-way traffic. If I can increase the rates, I would have done it yesterday only. But it's a whole process. The market has to respond. The advertiser need to feel okay about it. And I think it's a everyday affair of ours to ensure that we are able to push our rates a bit. But it's not that simple. So I hope you will appreciate this.
And so last one from my side. Are we seeing intensity of competition increase in newspaper business with fall in paper prices?
So frankly speaking, in last 30 years of my career, we have always seen very intensive, extreme competition in all the markets. And that's why it keeps us on our toes all the time. So we haven't seen any change, plus or minus, to be very honest.
Okay, thank you so much, and all the best for the next coming quarters.
Thank you, sir.
Thank you. Our next question is from Amit Ketan with Laburnum Capital. Please go ahead.
Hi, good evening, and thank you for the opportunity. So my first question is on other operating income. There seems to be a substantial jump of about 30% quarter on quarter. What's driving this, and is this a sustainable number, or is there some one-off element here?
These are the job works done by our production team in various locations. Because as you know, our printing presses are lying idle during the day. So an MP printer is one of our printing subsidiary is our setup in Noida. So they also do the job work. So all these guys are going out and doing higher job. Especially after COVID, this whole printing job has increased. And also this bucket has the income from interest from FD. As you know that currently company is sitting on a 631 crore bank and cash balances. So a large chunk of it is in FD form. So we get FD income also on this.
I'm talking only about the operating part, right? Not the other income. Other operating income, if I exclude the circulation and the advertising revenue from your...
I'm talking about that only. I'm talking about the other income, which includes job work, and it includes the little bit of event income, and also the FD income, and also it includes the wastage from the newsprint sale.
Understood. Secondly, we've done a very good job on cost control over the last few years. If we exclude newsprint cost, right, how much of our cost structure is variable and how much is fixed?
So frankly speaking, if I look at the other cost apart from the manpower, so my Q4 cost is around 144 crore rupees.
Yeah.
This 144 crore, I can call it 100% variable, but in a way it's fixed because I have to print number of copies. So in a large way, I would call it fixed depending on the number of copies, circulation, our approach in the market and all.
Got it. So what I'm trying to understand is, say tomorrow, next year, if your revenues fall 10%, how much our cost can fall by?
Okay, I'm going to answer it another way. If my revenue increases by 10-15% next year, how much this cost will go up? So let me give you the number. In the Q2, we had a cost base of 138 crore. In Q3, because of festival, the cost went up to 153 because more number of pages and all that. In Q4, it came down to 144. So our idea is to keep this cost under control. This should only increase when my revenue goes up, because when my revenue goes up, either through circulation or the ad revenue, the number of copies goes up and number of pages goes up. And I'm more happy to increase this cost because then I'll print more pages for advertising and I'll incur the cost for that.
Got it. And lastly, our circulation revenues have been kind of flattish, and we would have affected some price increases over the course of the year. So what would be our loss of copies, and how should we think about volume growth from here on?
So our loss of copies is nil. If you look at my Q4 number last year and Q4 number this year, I am at the same number, 43 lakh round. And I've increased the cover price from 4 rupees 70 paisa to 4 rupees 82 paisa. So I've taken a 12 paisa, which is 3% jump in my cover price overall, without any loss in the circulation.
Got it. And how should we think about volume growth going forward?
As I mentioned in the last call, we are working hard to increase another 2-3 lakh copies this year. And as of now, things looks okay. Let's see how it goes going forward.
All right. That's it from my side. Thank you and all the best.
Thank you, sir.
Thank you. Ladies and gentlemen, if you wish to ask a question, please press star, then 1. Our next question comes from the line of Pradyumna Chaudhary from JM Financial. Please go ahead.
Yeah, hi sir. Congrats on a good YOY set of numbers and an improving outlook. So my first question is with regards to the gross margin. So last couple of quarters, we've been seeing a declining newsprint prices, right? So, but the same hasn't really translated till now at least into improvement in our gross margin. So could you throw some light over there? That's my first question.
So if you look at the EBITDA margin, in Q2 we were at 16% EBITDA margin. In Q3 we went up to 17% EBITDA margin. Now, as we sit in Q1, we believe our margin should be decently higher than this. So when we meet you in the month of July now, we'll give you some good news on the margin.
Okay, and just trying to understand more from an inventory side, are we done with the probably some high cost inventory that we were left with regards to the newsprint? Because
very much done. Let me give you the newsprint prices trajectory also. In Q2 last year, we were at 63,500 rupees per ton blended cost of the newsprint of Indian and imported. In Q3, it went down to 61,500. In Q4, it went down to 60,000. And as we are sitting in Q1, we are hopeful that this Q1 would close at around 57,000. So there has been a constant decline in the newsprint cost, and also this will reflect in the margin going forward.
Usually, so what I'm trying to understand is usually what's the lag period between the prices going down and the same getting reflected in our margins? Just a sense, a very broad sense.
There is no formula. For example, at one particular point of time, we thought $800 or $850 was a okay price because market was showing indication for $1,000, and I went ahead and bought a 6-month stock. After that, market did go to 1,000, but then quickly got corrected and came down to 750. So the lag period, because I bought for 6 months, benefited me and stood with me. While if I don't buy for 15 days, 30 days, the lag period is less. So there's no formula, frankly speaking. It's a commodity market, and one has to look at that accordingly.
Understood. And my second question relates more to the digital app side. So, now are you in a position to give any updates with regards to our strategy over there?
So I can update you saying that we are doing pretty good in digital. We are, as we mentioned to you last time also, that our focus. So generally, what happened in digital business? people are dependent on the advertising to take care of their digital expenses and give them profit. But what we have seen in the news genre worldwide, especially if you look at the example of New York Times and other publications from Sweden and other places, we have seen their dependency is more on the subscription rather than the advertising, because advertising in digital platform is a commodity. Okay, so our focus also is there that we need to go towards subscription, and that's how we've been working in last from 2-3 years time on that, making sure that our content are really worthwhile for a customer to pay for it. And we've been doing multiple experiments in multiple markets in different socio-economic categories of our readers to see how much they are willing to pay. Are they interested in the paywall or a metered wall or e-paper and all that? What would they pay for? So all these experiments are going on from last 6-8 months and would take another, I think, 8-10 months more. And I'm sure that one thing I can assure you, we are very much in the right direction.
Understood, sir. And my last question is with regards to the rate of advertising. So I think it's been 4-5 years since we last saw an increase by the DAVP. So are we expecting any increase in advertising rates by then in the next few months maybe?
I will certainly forward your request and suggestion and apprehension to the Government of India to look into it.
Thank you, sir. All the best.
Thank you. Ladies and gentlemen, a reminder, if you wish to ask a question, please press star, then 1. Our next question comes from Naman Dhanuka, an investor. Please go ahead.
Hi, thank you for the opportunity. Sir, I was recently seeing a billboard of yours. Is there a new campaign that you're running in Mumbai? And could you share some thoughts on that, please?
So, just to let you know, Dainik Bhaskar as a newspaper has been launched in Mumbai, but it is not being launched by DB Corp. As you know that a section of our family runs the business in Maharashtra for Hindi. So they are the ones those who have launched Mumbai, obviously with our support, with tie-up with us. So, but no financial involvement of DB Corp on that. And they are doing a good job by it.
And secondly, you mentioned that you have 631 crores of cash and cash equivalents, and you're also generating reasonable amounts of free cash flow every year. So if you can just explain to us what you plan to do with the excess cash going forward.
I'm happy to inform you today board decided to announce another interim dividend of 3 rupees. So this year we have announced 6 rupees of interim dividend equivalent to almost 100 crore of rupees, which is 63% of our PAT. So as you know, our policy has been very clear that unless company needs some more money and all that, whatever money boards approve, we announce as a dividend.
And is there any possibility of doing a buyback, considering that the stock price is where it is and you don't really have need for the excess cash?
We can certainly take your suggestion to the board in the next meeting.
Thank you.
Thank you, sir.
Thank you. Our next question is from Riya Mehta with Equatus Investment. Please go ahead.
Thank you for giving me an opportunity and congratulations for good set of results.
Thank you.
My first question is in regards with the digital business. So we've been doing really great there, and just out of sheer comparison, so I think Dainik Bhaskar app was on January 22 and May 22, we had around 13.6 MAUs. However, sequentially we've dropped down to 10.9. Any particular reason?
No. I think you got some number wrong. We have not dropped down from 13 to 10. You must be seeing the overall number in our... Pawan, correct me if I'm right?
I want Jan. I have it from the presentation.
You're talking about MAUs, correct?
Yeah, MAUs.
One second.
So, ma'am, MAU is a function of...
Yes, you're talking about March 22 number, correct?
Yeah, May 22, I think.
Yeah, that actually was done as a promotion by us for that particular month. That's the reason on that particular month number went up. Otherwise, if you look at my overall number, we've been maintaining a number of around 16 to 17 million for Dainik Bhaskar and Divya Bhaskar put together.
Right.
And as I mentioned to you, we are experiment these days now in terms of subscription preparation for going forward. So we are also experimenting in particular geography, particular socioeconomic class, to see when I go and ask them that if you have to pay for a metered wall, if you have to do something as such and all, how do they respond? So maybe a couple of lakh people here and there keep moving based on that.
Yeah, because I think in 2022 we had around average of around 16.5 to 17, and now we are seeing around 14 to 15. So that's why I was just a bit concerned. My next question is in line with the print. I think sequentially our raw material prices have been going down. However, EBITDA for the print as a whole has, so in Q2 FY22 it was 17% and then it was still higher. And I think Q4 it sequentially is decreasing to 15.7. So this is an impact of inventory of newspaper or any other thing, expenses we can read into?
No expenses, all costs under control. This is all about newsprint. And also what happened, the number of pages have gone up in last 2 quarters because of the more inventory of the advertising in the season time. Because last year, if you remember, in this quarter, the education results were postponed. So that quarter was not a very strong education season. This year it happened because of that.
Okay. Yeah, because the raw material prices were going down and EBITDA was up. And now the price is going down, still our EBITDA is going down. So I was just concerned there.
As I had answered earlier question that in the Q1, the EBITDA margin will expand in a pretty decent manner.
Okay, thank you. And my third question would be in regard to the regional advertisement. So I think in an interview you said that we've seen 23% volume growth. So could you elaborate more on where do you see this coming from? Going forward, where do you see growth coming from and which segments, and do you see any shift in the segments as a whole?
Growth is coming from largely, I would say, barring out few states, most of the states are contributing to the growth, number one. Number two, segments are very clear: real estate, education, jewelry, healthcare. These are the segments, government, which are growing pretty decently. And our focus is also on these states only, these states and these categories.
And could you give some more details on auto? How is auto doing for us? And earlier it was some 100 odd crores. Where is it right now, and where do you see it going forward?
So frankly speaking, if you look at the auto number over last year, we have grown. But if I see the auto compared to that 100 crore of 1920 number, we are still far behind because most of the auto companies are hardly launching any vehicles. So that's one problem we have with them. We're waiting for them to start getting the response from the market, start selling more vehicles, and then they should come and do more launches and advertise.
Okay. And I think you said that the new age startup companies are investing more with us. So could you give some insights into that?
What happened, that generally people used to say that all the digital companies are different, they don't look at and all that. So I'm saying all the digital companies are also advertising with us. You know, all the food delivery guys, all the medicine delivery guys, different apps, they come and advertise through us to capture the audience. So that's the reason we tell people that all these new age, so-called advertisers are also looking at print when it comes to popularizing themselves.
So going forward, correct me if I'm wrong, we would see a similar kind of volume growth of 23 to 24% going forward. And in terms of value or yields, it would more or less remain constant.
I can only say that we are working very hard. Teams are doing all efforts to ensure that the growth comes in the way we are looking at it. Committing on any number would be a futile exercise because better to deliver and come back to you in the month of July to give you the quarter one numbers.
Okay. And how is FMCG advertisement going? It was a small part for us, but it was lower FMCG and lifestyle.
Yeah, but FMCG is growing but on a very single digit, and lifestyle is bad. Not too bad, but still bad.
Thank you so much. I'll get back into Q4 for the questions.
Thank you. Our next question comes from Bhagyesh Kagalkar with HDFC Mutual Fund. Please go ahead.
Yeah. Hi, sir.
Yes, sir.
There are two queries here. One is, okay, you'll be aware that New York Times did some 11% growth to last year, 2.31 billion. The second part interesting about them was that they are going to receive $100 million from Google Alphabet, the 3-year deal, which will allow them to feature innovative content. The issue here is, I think the government has been supportive of the Indian print media grievance, but nothing concrete has happened so far up to that the big tech companies do share something with us, essentially. Yeah.
So as you are, if you remember last time I mentioned to you that DNPA, and which is a Digital Newspaper Association as well as Indian Newspaper Society, has already gone and filed a case against Google in Competition Commission of India. And since the matter is sub judice, it will not be prudent on my part to comment anything on that. But we have taken up the matter with the regulator, saying that Indian newspapers should be compensated by Google in an appropriate manner.
Okay. So other question is a general question. See, most of the area in which we operate now will face elections, both Lok Sabha as well as the Vidhan Sabha elections in next 12 to 18 months. You had mentioned that there will be a boost to the overall economy, small guys advertising and everything. Will this include the political parties also who will take out big ads now onwards, because the election will be fiercely contested, any election essentially. So that should give an extra boost to the revenues over the time.
The political parties should consider us, our markets, so that if they want to communicate their message to our millions of readers,
yeah,
do it through us.
Okay. Thanks for the clarity, sir. Thanks. All the best. Yeah. Thanks.
Thank you. Our next question comes from Yash Rangaswamy with JP Associates. Please go ahead.
Yeah, hi. Good evening. First of all, congratulations on a good set of numbers. So I would, my first question is with regards to the digital spend that we've done during the quarter. Can you throw us some light on that, please?
Sir, if you remember, couple of quarters back, we took the permission from all of you to not disclose any specific numbers on digital, so that our competition should not get any kind of information on this front. That's the reason we are not disclosing any specific number on the digital. But I would like to assure you that the company is doing everything possible to ensure that we get the desired results in the digital platform, and we are working towards it.
Okay, and was just going through the results that have been announced, and I was just trying to figure out what the EBITDA margin for print stands at, because it's not mentioned anywhere. I was looking at the results as well, so nothing's been mentioned on that front. Could you just let us know the number, the margin for the print business alone?
So in print, the EBITDA margin is 20%. 20.
Okay. And just one more question with regards to the government ads. Have they come back versus what they were before, or are we still, there is still some ground that needs to be acquired on that front?
We have acquired all the grounds.
Okay, so there is no embargo as such at the moment?
No, sir.
Okay, thank you.
Thank you. Our next question comes from Pradyamna Chaudhary with JM Financial. Please go ahead.
Yeah, thank you for the follow-up. Just another question was, would you be able to quantify the government ad revenue in the quarter gone by? How much came from government ads?
So government advertising includes central government, state government, panchayat, all the government local bodies like Nagar Nigam, state housing boards, and all put together as such. If I look at the Q4, the government revenue was around 65 crore rupees.
Around 65. Okay.
Okay.
Yeah, thank you.
Thank you. Our next question comes from the line of Riya Mehta with Equitas Investment. Please go ahead.
Hi. Thank you for my follow-up question. My question is in regard to, there was a case in the radio business where we have filed a counter case for increase in there was some royalty or something to be paid to the main label producers or something. Could you elaborate on that?
We challenged it in the Supreme Court. The court has admitted our petition. It's under consideration of Supreme Court. It's an old case. The entire industry is in Supreme Court has to hear a petition. So we are pretty hopeful that we'll get a favorable order from the Supreme Court.
Okay. And if it is unfavorable, what will be the impact on the financials?
Since the matter is concluded, we would not like to comment on that. I hope you will appreciate that.
Yeah. Also, in regard to the employee cost, I think it has increased significantly on a quarter-on-quarter basis. So, do we see this similar trends going forward?
When you say significant, what percentage is significant for you, madam?
Percentage of sales, it has increased almost 180 basis points if you see on a quarter-on-quarter basis the employee expenses. So, we just want to hope you insight on it.
No, my manpower cost, if you see Q on Q from 100 crores, has gone up to 102 crores. So 103 actually. So it's a 3% growth in the manpower cost.
I'm seeing the percentage of sales, so maybe, yeah, okay. And in terms of other expenses, which is events and all the other ancillary businesses, what kind of margins do we see there? And what kind of growth? Because last 2 years, I think FY22 and FY23, we've seen significant growth in that business. Yeah. So going forward, what do you anticipate, and what are the margins like in that business?
Margins are in the same range what DB Corp as a company may there. And in terms of growth, we are hopeful that this higher percentage will continue, because after COVID, a lot of people have started getting things published and again. So the printing job is doing pretty good there.
Okay. I think that's it from my side. Thank you.
Thank you.
Thank you. Ladies and gentlemen, if you wish to ask a question, please press star, then 1. Our next question comes from Mohammed Patel with Care Portfolio Managers Private Limited. Please go ahead.
Yeah, hi. So my first question is, for FY23, can you split the sectoral mix for advertisement into education, real estate, FMCG, government?
We can give you some flavor. As I mentioned to you, for the Q4, government was around 65 crores. And response category, which is classified on, was around 50 crores. Real estate, education and automobile put together was around 100 crores. Rest are the small other categories.
Can you give the same number for full year FY23? Percentage is also fine.
So if you go by percentage of last year, so government was around 15%, education, real estate, automobile put together around 30%. And response category another 15%.
Okay. My second question is, are we expecting any city addition launches to aid volume growth in the near term?
Sorry, I couldn't understand it.
Any city addition launches, adding new cities or adding new additions to increase the volume growth?
No, we are expanding within our territory, within our geographies.
Okay. My next question is, can we expect the gross margin revival to historical levels starting FY24?
That's what we are working towards.
Okay. And what is the average circulation volume number for full year FY23 versus FY22?
Almost 42.5 to be correct, full year. Yeah.
Subscription includes e-paper, and I was just thinking, so if that is shared on a social media app, so how do we tackle that?
No, we don't. So there is a High Court orders now. where the e-paper circulation is illegal. So whenever we come to know about few cases, we take them to the complaint about the police station and they themselves correct themselves. Because there are some excited lot, those who make a group and every morning they copy the e-papers and circulate to all the groups. I'm sure you would also be a member of one of them groups. So, these excited lots, whenever we come to know about them, we send them the legal notice and then they correct themselves.
Okay. And my last question. So you prefer subscription over advertisement. So if you can just tell your thoughts on why you believe on this.
It's not about my preference. Is that how the news apps worldwide, the successful one, have emerged. And when we look at and review in the same context the Indian market, we also believe there's a way forward. Because advertising on the digital platform is a commodity. So why would somebody come and pay me a premium for advertising beyond a point? And if my reader advertising in a newspaper or in a digital format have a different correlation. In a newspaper, I'm immersed in a particular news, in a particular paper, and they're advertising on the side of it. While in digital, advertising is in a very in my face kind. You are intruding in my reading pleasure there. So that's the reason as a consumer, people, nobody appreciates advertising on digital platform or even on television platform. If you look at IPL, suddenly I'm watching something seriously and it goes off and somebody comes in saying that, why don't you buy this candy? Now, you're upsetting me. While in print, it happens in a very decent manner. I'm reading my article, there's an ad placed there. That's the reason we believe that if a reader has to pay for an app, news app going forward, he doesn't want all this kind of nonsense there. You want to read your e-paper or your paper the way you read your newspaper. That's the reason we are not very comfortable with putting a lot of ads over there and irritate a consumer.
Okay. Can we expect some meaningful contribution from digital business starting FY24?
I think it's too early, sir. Larger thing takes time, and we want to give time to our readers so that they also get used to us and then show us the larger benefits going forward.
Okay. Thank you.
Thank you. Our next question comes from Ankit Shah with White Equity Investment Advisors. Please go ahead.
Thanks for taking my question. I just have one question on the margin. How would be the trajectory of digital business investments in FY24? And in this context, how would the margin trajectory of the company look like in FY24?
See, the advertising growth in print as well as the newsprint prices going down will help me improve my EBITDA margin considerably. Right. At the same time, whatever investment we have to do in digital, that will continue there. But since digital also is maturing now in terms of their requirement, so they won't need major help from us going forward. So that way, whatever saving print does will add on to the overall margin of the company.
Okay. So would it be fair to assume that the spend on digital business may not rise further? So if, let's say if we were at 100 rupees, next year it may not cross 100 rupees.
Yes, you can kind of assume that, sir.
All right. That's it from my side. Thank you.
Thank you, sir.
Thank you. Ladies and gentlemen, due to time constraint, that was the last question. I would now like to hand the conference over to the management for closing comments.
Thank you, everyone, for your participation and time on this earnings call today. I hope that we've responded to your queries, and we will always be happy to be of assistance through our Investor Relations Department headed by Mr. Prasoon Kumar Pandey for all your further queries. Thank you and have a great evening.
Thank you, everybody.
Thank you, sir. On behalf of DB Corp Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your line.
you.